Hello, everybody. This is Greg Gossett from Gossett Trading and Mentoring Live. And it is the weekend. It is May 1st, 2019. It is Saturday evening. And last week I decided that I wanted to do a weekend edition for my channel where I would go through each stock in the S&P 100, and we could go through, take a look at the technicals, see if we could find something for possible trade setup for the upcoming week. During my regular live stream, which is Monday through Friday during the last hour of the market, in case you would like to visit us there during that time, we take a look. We go through my watch list. There's about 46. Here it is. There's about 46 stocks in my watch list. These are major indexes, major stocks. We go through one by one and we analyze them. And if we see something that we like, then I'm going to purchase that at the end of the day, and I'll explain why I'm doing that and so forth. But occasionally someone will ask me, they'll say, hey, did you see such and such a stock? Boy, that was a great setup. And I'd say, no, I didn't catch that. It's not in my watch list. And then I would look at the chart and I would say, oh, dang, that was a good setup. I wish I would have taken a look at that. So during that last hour, during the live stream, I really only have enough time to explain to everybody what my positions are, my current positions are, when I got in them, why I got in them, how I'm going to manage them going forward, and then go through my regular watch list. So I don't really have enough time during that last hour to go through a bunch additional stocks than what I already have in my watch list. So now on the weekend, I want to go through the S&P 100, each stock one by one, and see if we can create a second list that's already kind of pre-qualified that I can look at during the regular live stream. So that's what we're going to do tonight, and maybe we'll find something that we would have never seen if we hadn't have done this. So, and at the same time, I will be teaching you as we go through each chart, what I'm looking for. Is it interesting? Where would it be interesting? So forth and so on. I'm going to talk about some of the entries we take, some of the signals. I'll go over them briefly, but I do have a video on my YouTube channel that is called, I better get the exact name for you, examples of my 7 different types of stock trade setups. So I will put a link to that in the description of this video, but in that particular video, I go through the 7 type of setups and entries that I will take. So if you want a little bit more in-depth knowledge of what I'm going to be discussing here tonight, check out that video. I think you'll like it. So okay, so that's what we're going to do, so let's get started. I'm going to say goodbye here on the webcam quickly because I'm going to be looking away, and we'll put Katie and I back up there. So all right, let's get started. So Apple is in my regular watch list. So, but I still will go through this. The market's been really tough the entire month of May. So we have some big dips in this market. And when you look back in time and you see dips, you think, dang, I wish I would have bought those dips. But it's very difficult to buy the dips in real time. It's scary, right? Because when you're buying a dip, really what you're buying is fear. And then if there's a big rally, it's going up. What you're really selling is greed. So there's low and there's too low. I like when stocks go down. I like dips, but at some point they become too low, and it's a fine line. For me, kind of the defining line in the sand is the 30 RSI. Generally, that's the last support that I will attempt to take an entry on. Anything under the 30, it's generally not available for me to buy. So, all right, so let's look at Apple. Obviously we're down quite a bit. We're under the 200-day moving average, which is not a good thing technically speaking. We are currently at a 29.59 RSI. I think I may have to move this up here. We'll just move it over here. So we're at a 29.59 RSI, and if this were to close back above a 30 RSI, I would consider buying it. Although these kind of buys are not, I'm not looking for the exact bottom. I am just looking for a snapback trade, a mean reversion trade. If Monday this did close above a 30 RSI, I would probably be targeting somewhere back up in here for just a bounce back trade. But Apple is one of the ones that I am definitely going to be watching for a close back over the 30 RSI. So I will mark it here, even though it is in my regular watch list on Monday. But for the purposes of this video, this does interest me in this location. Let's take a look at the weekly real quick. It was not able to close above the 100-day moving average, which is also bearish, but on the positive sign, we could find support here at the -1 ATR channel. This is the green line here on the weekly. Once again, on Apple, it's at a 29.59 RSI. If it closes back above the 30 RSI, that will be my trigger, but only for a bounce back trade. I do not think that that's the bottom and it's just going up from here. It may just go up 2, 3, 4 days, but that's okay, because the intent of my trade was just to stay in it for a short amount of time. Now if it keeps going and going and going and doesn't have any issues, then I would also I would continue to hold it, but I do phase out of my positions as they move my way. And so every time it does go up a certain amount, I will be taking some of the trade off the table. So I will mark Apple here because it's at a 29.59. I need to see it close above the 30 RSI. And I'd really like to see it close above the third ATR channel. See this thick green line, or this thick gray line? That's the third ATR channel to the top, and this line here is the third ATR channel to the bottom. About 88% of all stock prices stay within the +3 and the -3 ATR bands. For this to be closing under the ATR band, the third ATR band, is not a positive sign. But if Monday we close, or anytime next week we get back above 30, close back in the bands, that will be a good entry point for me. Amazon is also in my regular watch list, but let's take a look, see what's going on with Amazon. In my opinion, Amazon is getting pretty close to a good sweet spot to take a long position. It is still over the 200-day moving average, which is technically still in a uptrend by some measures. We are to 35.69 RSI. What I would really like to see is I'd like to see Amazon come down, go below the 200-day, close back above either intraday, or close back below, close back above on a daily basis, either of those. But right in this zone here, right in this 1750 kind of zone, I will definitely be getting interested in this. And if it can go below the 200, close back above, then I will use a subsequent close below the 200-day as my exit, so that I will, if I'm wrong, I will keep the loss small. If I'm right, it gives me some upward movement. It gives me a good risk, small risk, large reward. And a lot of professional traders, a lot of hedge funds, big financial companies, they like to buy dips on major companies like Amazon back to the 200-day, because it gives them a good entry point. It gives them a good risk to reward ratio. So I will definitely be looking for Amazon somewhere in this range. If it closes under the 200, I will just get out and I will wait for it to recapture the 200. So this is one of the, to me, this is probably one of the most interesting charts on my watch list right here on Amazon. So I will mark that even though it's still on my regular watch list. Well, Boeing has had a tough time of it. You know, we did make a bottom here. We came up, we tested the 200. That 200 now is acting as support. As resistance. We took another try at the 200 day. We were not able to close back above it. And now we are pulling away from the 200 day moving average. So to the downside, if we could get into a 30 RSI range, let's take a look and see where that would be on Monday. I have this little feature here where I can see exactly. Yeah, so just estimate it right there about where that blue line is. But this particular blue line here, about 330, not only does it line up with the third ATR channel, and again, a large majority of time prices stay within the third ATR channel and the -3 ATR channel. Not only would it have some support most likely of the third ATR channel here, we would also be at a 30 RSI, which, you know, the closer to a 30 RSI I can enter a trade, the better, because even if it closes at 29.99, I'm out of there, right? So I always like to take trades as close to the level that if I'm wrong, I know very quickly. So like I said, if it's a 30 RSI, if it closes at 29.99, I'm out of there. So I like to get my entry points closest to my stop loss, so I have the smallest amount of loss. And then on top of that, when we get down here, I already know from these MACD bars that we're going to have a double. If we get down here, we'll have a double bottom with a bullish divergence. You see how deep these red bars are? Now, if we come down to here, we may have some red, but I know they're not going to be as deep as this. So when I studied with Dr. Alexander Elder, you know, this is his favorite setup, called the double bottom with the bullish divergence, or a bearish, a double top with a bearish divergence. But in this case, we would have 3 entry points. We would have some support of the third ATR channel. We would have some support of the 30 RSI, and we would also have a double bottom with a bullish divergence. So I really do like Boeing in this area at about 330. Don't know if we'll get there, but if we do, that is definitely something I will be watching. So I will mark Boeing. Boeing is also in my regular watch list. Alibaba is just going down, 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 down. It's a real casualty of the trade war, trade spat, whatever you want to call it, with China. It's far under the 200-day moving average. It's at a 24.37 RSI. So I cannot buy this, cannot even think about buying this unless it closes back above the 30. So nothing on Alibaba. Caterpillar may be interesting here for the fact of we are at a 29.93 RSI. If we move up even just a little bit, we'll be going from under 30 back over 30. That will be a buy signal for me. And on top of that, I don't know, where it's going to close or how much it's going to close, but if it does move up, it will have taken out, if it does move up over 30, it will have gone above this particular low, a 1-day range, or if it closes back above the low of this bar here, I would like that even better, because then it would be a false breakout to the downside and reversal and a move up from where we are at the third ATR channel. So Caterpillar is on my regular watch list, and so I will be watching that, but I will mark it here. Canopy growth did find support for a couple days at the 200 like it should, but it gave it up on Friday. It's a 3406 RSI. For me to be interested in Canopy growth, it would have to go under the 30 RSI over here, close back above, or to the upside, a close back above the 200 day. But, it doesn't really jump off the screen at me, so I'm not going to mark it. Cisco. Well, Cisco is somewhat in purgatory at the moment, meaning that it's not quite low enough for me to buy. If we got back down here, tested this previous low back here, we would have a double bottom with a bullish divergence, which would be positive. It would also dovetail with the third ATR channel here. So this is somewhat interesting. It may be days away before this happens, but it is an area for us to consider. If we got down to this area, it'd be even better if it went down lower than this previous range, then close back above. That would give us a confirmation of a double bottom with a bullish divergence. We would also be in the low 30 RSI level, which is also positive, and we possibly watch us bounce off this third ATR channel. So this is pretty good. I do like this, not for right this second, but as I tell everyone in my live stream each day, it's important to identify levels that you would like to enter a stock at. And it's the best to do it when the market's not open, you're calm, you can look at things objectively, just like here, right? We're not in this position, but objectively, I'm not making an impulsive decision here. This would be a decent area for me for the reasons I've mentioned. So, let the trade come to you. Identify the trade, then let the trade come into the area that you identified as a sweet spot or a good setup or a good zone when you're nice and calm and objective. So I will mark Cisco. Cisco is on my regular watch list as well. Delta Airlines, a couple days of support, was hanging at the 200. We've really crashed down. We're under the 30 RSI. We're under the 100-day moving average here. We also closed below the third ATR channel, so that is not positive. I'm not interested in Delta at all. Okay. Okay. AdVibe. AdVibe, not really interesting here at all. Abbott Labs, well, you can see Abbott is consolidating sidewards and sidewards and sidewards, forming a bit of a pennant. This could break either way, up or down, but right now it's not extremely interesting to me. Accenture, similar. It is moving sideways. It is above a 50 RSI, which is positive. We have found some support at the 50-day moving average. Preferably, I would like to see this close below the 50 and then back above 50. Let's take a look at the weekly on this. Weekly is pretty high. We're at the close to the third ATR channel, so probably nothing on that. Adobe, we did lose the 50-day moving average. We are under a 50 RSI. Probably not that interesting. At the very least, I'd have to see this close back above the 50-day moving average. If it could close back above the 50 and close back above the 20, the 10, and the 5 on strong volume, a nice clean break, it would be interesting. I guess on second thought. So I am going to go ahead and mark Adobe. Okay, Allergen, 2283 RSI, very oversold, but this is one of those situations, where I say I like to buy it low, but not too low. This is too low, 2283. I know that sounds counterintuitive, but 2283, I would at least need this to get back above the 30, but yeah, I'm not interested in that at all. AMG or AIG, I do like that we have moved. We are moving up strong. This has acted very strong compared to the rest of the market, meaning it has some really good relative strength. The green lines here, that's the 1 ATR. This is the negative 1 ATR. Any place in between this channel of the 1 and the negative 1 ATR, I consider this the value zone. So we have been in a nice uptrend. We have come back down into the value zone, which is totally normal. It doesn't mean it's crashing or anything. This is to be expected. So at this point, now that we're in the zone, that's positive, but it doesn't mean you immediately buy. You have to you have to have a zone. You have to have something set up in a zone, the context of the chart to be in the right area, but then you need some kind of entry signal, whether that's an under 30 to over 30, whether that's a V1, V2 entry. A V2 entry is consisting of 3 bars. Here's day 1, here's days 2. Day 2 washes out day 1. If Monday we closed above day 1's close, that would give us a V2. So day 1, day 2 goes lower than day 1. Day 3 closes above day 1's close. Now there is also a thing called a V1, which would look like this, where you have the bar washing out the low of the previous bar and then closing above the close of the previous bar. That happens in 2 bars. Here's day 1, day 2, closes above. We call that a V1. That's not what it looks like. This is what it looks like. So day 1, day 2 did not close above, but it does set us up for what's called a V2 if the 3rd bar or Monday's bar closes above there. So I do like this. It's not too bad. I will mark it. Allstate is just moving sideways. Nothing interesting there. Amgen, we talked about the double bottoms with the bullish divergences before. Here we have a low. We had a nice rally. We would need to come back down, test this low, and then have the MACD bars more narrow to the downside than the previous low. And I can already tell that's going to happen just from experience. So if that would be decent, it would be decent. We are well under the 200-day, but we seem to, at the moment, the momentum on the downside is less than the previous momentum based on the MACD bar histogram. So if Amgen got somewhere into this range, I certainly would consider buying it. It would also be close to a 30 RSI. So I will mark Amgen. Amazon we just talked about. American Express. Well, it's been a huge sell-off. A lot of supply came into the market. There was some distribution there. Is this a dip or just continuing down? Well, I wish I knew, but at the very least, in order for me to take a look at American Express, I would need it to close under the 50-day moving average. This is the gray line. Close under the 50-day moving average. Close back up. I don't think it's as good as any of the other trades, though, or the other possible setups, because a lot of those setups came when the RSI was like at a 30 RSI, which is good. RSI just by itself, really, in my experience, is not strong enough. You want to have it be combined with other levels of support, other indicators. This one would just be a close below the 50 and close back above. If this was at a 53 RSI right now, knowing that I had a 50 RSI support underneath me, along with the 50-day moving average. That may get me interested, but I'm just going to let that one go. Boeing, we already talked about. Bank of America, yeah, just lost that 200-day. It's at a 27 RSI under the third ATR channel, so not interested there. BIIB just broke out to a new low. It's a 33 RSI. Don't like the looks of that one. Bank of New York, obvious downtrend. We are so far extended from the 200-day. We're at a 1718 RSI. I think that's the lowest RSI I've seen for the week. So I would definitely not be interested in that one. Booking Holdings, no. I mean, it's at a 30.55 RSI. And it also did go below and go back above the third ATR channel. There's no double bottoms with the divergences. I mean, you know, technically you could buy this here with just a stop below the 30, but I would have had to have bought this on Friday at the close because that was the signal. I mean, it's okay, but honestly, in this kind of market, with the biggest and the best names being really beat up, I'm not going to invest any money in a smaller company when I can, you know, look for the same kind of trade on Apple. So nothing there. BlackRock, you know, a close back above the 200-day may be interesting. A close back above the 30 RSI on BlackRock. So it's okay. I'll mark it here just for us to take a look at. Bristol Myers Squibb, nothing on Bristol Myers. Berkshire Hathaway, my goodness. I'm seeing these charts for the first time along with you here because I don't usually look at these but once a week. Yeah. So Berkshire Hathaway is down 10% in about a month. It did hold the 30 RSI, which is positive, but nothing that really interests me. It may go under the 30 and back over the 30, but that's the only thing it has going for it, so I'm going to let that one go. Citigroup, pulling away on high volume from the 200-day moving average, so not interested there. Caterpillar, we talked about. Celgene, lost the 50-day, not interested. Charter is holding up pretty well. It is in the value zone, which is also positive. So it did already trigger a V2 on Thursday. See, here's day 1, day 2, day 3. Day 2 takes out the low of day 1 and closes back above the close of day 1. So that one's already triggered, so nothing there. Colgate Palmolive, you know, it did bounce at the 50-day moving average, but again, I would be more interested in this if it bounced at the 50-day moving average at the same time it bounced at the 50 RSI, but we're under the 50 RSI. So I need more, you know, a duplicity of signals and confluences to happen at the same time. So not interested in there. Comcast, yeah, nothing in the short term there. Capital One Finance lost its 200-day, nothing there. ConocoPhillips, somewhat interesting in the fact that we have a low, we have a rally, we now make a lower low. This move down here, the MACD bars are narrower than they are here. So we do have a double bottom with a bullish divergence in place. Now, just because that happens does not mean you buy. You have to wait for some kind of entry signal. And the entry signal for me would be if we could close back up into this range. See, this was the bottom of the previous range. Now we've broken out to a new range. I'd like to see it move back and close back above into the old range. That would be my trigger. Here's an example of a V1, by the way. Here's day one, day two washes out day one, and did it close above? Very close, close above day one's close. If I had been watching this, I would consider taking this here. And you just heard me say, well, Greg, don't you want this to close back up into the into the previous range? Yes. But of course, if I have a trigger that triggers me into the trade at a lower price, then I would want to take that, right? And so this could have been a possible entry. Here you have the bottom, rally, double bottom. That sets with the bullish divergence with the MACD. So that sets the tone. That's the setup. Then you have to look for the entry. And V1, V2 entry, this would probably suffice. So we'll watch that one. We'll put it on the list. Costco, my goodness. Really in no man's land here. You'd have to get above the 50 in these moving averages up here, or possibly a test of the 100-day and or the 200-day to the downside. So nothing really gets my attention there. We talked about Cisco already. CVS, nothing there. Chevron lost the 200-day. I do like ConocoPhillips better because at least on ConocoPhillips I have this double bottom with the bullish divergence, whereas on Chevron, no, we might be getting close to a double bottom, but there's no MACD divergence, so nothing. Oh, that was on Chevron. No, that was right. That was right. So compared to ConocoPhillips, yes, you have a double bottom, but you do not have a bullish divergence. You see how these bars here are similar to the depths of the bars here? A little bit less, but in back testing, the best double bottom bullish divergences happen when the second leg down, the bars are about halfway of the first, and these are more. This is more than halfway. So I like ConocoPhillips much better. So nothing on Chevron. Danner Corporation, just moving sideways. Nothing really interesting there. Walt Disney. Walt Disney has been moving up. It has been moving sidewards all May, but sidewards is good in a month like May. So that means that the relative strength of Disney is very strong. I considered buying this. This is in my regular watches. I did consider buying this on Friday. And why did I? Well, because one, the relative strength, it's much stronger than other stocks. We are in the value zone in between the green lines, the 1 ATR, negative 1 ATR. So we did get close to testing this low back here, found some support. But again, you look for the big picture, you look for the setup, you look for a zone for things to line up, but then you have to look for an entry point. And do you see how this was almost a V1? Here's day one, here's day two washes out day one, but do you see how we did not close above the close of Friday? If we had done this, that would have been my trigger. The setup's good, the area's good, the context of the chart's good, and then a signal. But that is not what happened. It did not close above, so I did not take it. So I'll just I'll just let that one go. It's in my regular watch list, so we'll be watching it anyway. But Dow, my gosh, this is Dow Incorporated, not the Dow Jones. Very ugly. Duke, well, tested the 200-day intraday. I you know, buying this intraday at the 200 would have given you a better risk reward ratio if you're that kind of trader, intraday trader. But there's really nothing here interesting for me at this point. Dow DuPont. Well, it is working on a double bottom with the divergence. Here's the low rally. If we can come back and test this low, you can see that if we got down here, see, there are no red bars. I mean, if we get down here and test this previous low, we may get a red bar, but I know it's not going to be this deep. And we may be testing the 30 RSI at the same time that happens. So I think that looks quite interesting. Not here right now, just the context of this chart at the moment with possible double bottom with the bullish divergence and a low RSI area. I like that, but we need an entry, right? We need an entry signal. My entry signal would be either a close below 30 back above, or I'd like to see this break to the downside, in a new range, fail, come back up. That would also be a good signal. So I do like this. I do like this setup if it does what we need it to do, which is go down, reverse back up. That would give us some good confirmation that the market has tested this area here and didn't like it. But it's not there yet. The setup's good, but there's no signal. So keep that in mind. So I will mark that. Emerson. Yeah, nothing there. Under the 30 ATR channel, under a 30 RSI, no double bottoms, no divergences, nothing. Exelon, not much there. Ford, my goodness. You know, a close back above the 50 at the very least would be interesting if it moves up, or possibly a test of the 100-day moving average down here at the same time. We're at like 830 RSI. So I'm just going to let that one go. Facebook did hang for a couple days here at the 50 and then fail. Where would I be interested at Facebook? Down here. See if we could test the 100-day moving average. And when I mean test, close below, close back above is what I prefer. Intraday, if it hits it, bounces it, that would also be okay. So I will mark Facebook there. FedEx, nothing interesting. Under 30, no double bottoms, outside of the third ATR channel. General Dynamics, not much there. GE, not enough for me to buy there. Gilead Sciences, Gilead, nothing there. General Motors, my goodness, that ugly. 2164 RSI. At the very least, close back above 30, but I'm not interested in this at all. Google, you know, so, well, here's Google, GOOG and GOOGL. I trade GOOGL. We're at 33 RSI. I would like to see this go under 30, even intraday, and then close back above 30. That would be my trigger. I like that it would happen right in here in this range of the third ATR channel, because like I said, about 88% of the time, all prices tend to stay in the +3, -3 ATR channel. Here it broke out a little bit. Now that was unusual, but usually, you know, you get to the bottom, you bounce up. Usually you get to the top, it comes back down. Not all the time, but just most of the time. But you never know, so you have to be careful, right? So close under 30, back over 30 would be interesting for me on Google. Goldman Sachs, you see how it tried to hold the third ATR band right here? Tested it here, 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 and here, and as a hold, and then Friday it just gave it up. So not interested on Goldman Sachs. Home Depot. Well, Home Depot has acted pretty well considering. I mean, you know, it did have a down month, but it is moving sidewards. You know, where do you want to buy it here? I would still like to see it close below the 200-day moving average and back above. So nothing really interesting there. Honeywell. I mean, it has come down to this upward sloping 50 moving average, close below, close back above. Now it's closed immediately right back below. I like to see those moving averages hold. Once you're above, below, then they've lost their strength and their respect as moving averages. And at that point, if something that loses the respect, the price loses respect for the moving average, then you usually have to go down to the next moving average to see if that will hold the support. So nothing on Honeywell. IBM, yeah, very sad. I mean, we're under the third ATR channel. We're at a 28 RSI. I mean, if it closes back above the 30, it will also close back above the third ATR channel most likely, but then you have the 200 right above you. I'm just going to let that one go. Intel. I already have a position in Intel. I bought it here back on the 29th of May. We were under the 30 RSI, and then we closed back above the 30 RSI, and we also closed back above the third ATR channel. You can see the next day it did move my way. I did hit one profit target, and right now very close to break even on this trade. So my exit on this trade now would be a close under the 30 RSI. Also, as a positive point, on the day that I took the entry, MACD also did go positive. See how the green is above the red now? So we had a positive MACD crossover. So that is positive also. So I already have that position. Johnson & Johnson, oh man, not interested on that. JP Morgan, well, a close back above the 200-day, I may be interested on JP Morgan. We did close underneath it. If it closes back above the 200, then it gives me a really well-defined support level underneath me. So if it closes back above the 200-day, I certainly would consider buying this, especially because we are at a low RSI. And if we, broke down and immediately broke back above the 200, yes, I would take that trade. I would use the first close below the 200 as my stop, giving me a very small loss if I'm wrong, but allowing me a large amount of upwards movement if I'm right. So I will mark JP Morgan. Oh, yeah, nope, nothing on Kraft Times. Kinder Morgan, it's holding up pretty strong, but it's very range bound. Same with Coca-Cola. It's pretty range bound here, but it's holding up. It's more of a defensive stock, so nothing there. Eli Lilly, kind of a hot, sloppy mess there. Lockheed Martin, I do have Lockheed Martin. I have a position in it. Why do I have a position? Well, we've been moving up strongly in the month of May. We did come back down into the value zone, and the value zone is between the 1 ATR channel and the -1 ATR channel. This is what I consider the value zone. We did come down into value. We had a V1 entry. Here's day one, here's day two. Day one takes out the low of day one. Day two takes out the low of day one, closes back above the close of day one, and you can see it has moved already in my favor since the purchase price. So Lockheed Martin we already have. It's a low RSI, but it's under the third ATR channel. This third ATR channel is now going to act as resistance to the upside, so I would not be interested in taking that. MasterCard back into the value zone, but very choppy, nothing there. McDonald's, well, here's an example of a V2, folks. Here's day one. Day two washes out or goes below day one. Day two, day three closes above day one's close, making it a V1. So I think the train's already left the station on this one, so nothing there. Mondelez, here we are. We did test the 50 RSI. I'd feel better about it if the RSI was also, the 50 RSI was also holding as support. I'd like to see those two come together. 50 RSI, 50 moving average right at the same spot. So nothing on Mondelez. Medtronic has acted quite strong. You know, I identified this last week. I did like the strength and the move over the 200. What I was really looking for, though, I was looking for a close back below the 200 and then a close back below the a close below the 200, then a close back above the 200. Didn't quite get it. We did get a bounce of the 200, which I guess was good enough, but I did want to see it close below and then back above. But anyway, it's very strong. I mean, you can see, you know, compare this to the rest of the market. Oh boy, good for Medtronic. So nothing there. MetLife. You know, we moved up here. We're back in the value zone. Technically, we could create a V2 on Monday if Monday's closed above this close here, day one, day two. Day two closes below day one. Day three closes above day one's close. It's possible. On the weekly, we have moved up nicely. Now we're coming back down into the value zone of the week. It's okay. It's worth watching for, but again, we would need some kind of V1, V2 trigger at the very least. 3M, 1876. My goodness. So nothing on 3M. Altria, just not doing well. It's a 3051 RSI. It did reject the third ATR channel a couple days back, which is good. Yeah, nothing there. Merck has held up pretty well. We've moved up. We've moved back down into the value zone. I do like this. I do like that we've moved up, down. We're moving sidewards. What I'd like to see now in the coming days is a V1 or V2. And what I mean by that, if it happened on Monday, it would go below Friday's low, close back above, showing me that the market has already tested the area back down below here, didn't like it, and reversed back up. So yeah, Merck is potential. Morgan Stanley. Boy, the financials are not doing well, are they? No. Microsoft did test the upward sloping 50-day 50-day moving average. I would be a buyer of Microsoft if we close below the 50 and back over, so we will mark that. Next, Era Energy, nice move up, starting to move back down. Like that it's moving sidewards. You know, if we could continue to drip lower, move sidewards a little bit more, have a move back down, move up, trigger a V1 or V2, that might be interesting. So I'll mark that one. Netflix, not healthy whatsoever. Nike, my goodness. Under the third ATR channel, under the 30 RSI. NVIDIA, oh my goodness, my goodness. It's a 1970 RSI. A lot of people have lost a lot of money in this stock. Any rallies, I'm pretty sure, are going to be sold into, at least temporarily. Nothing on NVIDIA. Oracle, it's just a waterfall of red to the downside. Under the third ATR channel, under the 30 RSI. Nothing there. Occidental. Well, this is not the best double bottom with the bullish divergence, but it's a good example to point out that we do have a low. We had a rally. I like to see the rallies come to the 20-day. But we did have a low. We did have a rally. We are making a lower low now. This is obviously lower than here. But see how narrow or how shallow the red bars are, the red MACD bars are here compared to how deep they are in this range. That is setting up that is technically a double bottom with a bullish divergence. But just because it needs to confirm, it needs a trigger, it needs something to go, okay, in the big picture, this looks okay, but now I need a trigger. What would that trigger be? Well, probably a V2 at this point. Here's day 1, day 2, day 3 would have to take out day 1's close. That would be a V2. But we're so low on the RSI. You know, we talk about the 30 RSI being, some kind of level underneath this. If you break that 30 RSI, then when you try to come back up to it, it generally will act as resistance above you. So I don't like this one. I like ConocoPhillips better. PepsiCo, moved up, moved down, moving sidewards. That's good. It's holding up. It's still a 52.36 RSI, which does show some positive momentum still. I would like to see it. I'd like to see a V1 or V2 from here, meaning that we go down, go below the previous day, reverse back up. That would be somewhat interesting. So I'll mark that. Pfizer. Well, we were under the 200, closed back above. Now we've closed under. Then on Thursday we closed back above and closed back under. So it's it's starting to lose respect for this 200. So I'm just going to leave it alone. Procter and Gamble. My goodness me. Yeah. This is the first time I've seen these charts. that's why you're hearing me make all these comments and going, whoa. Because this is all new to me. This is the first time I've run through it. So, well, the 50-day moving average is not going to be acting as support. Probably somewhere down in this area. If we can get a confluence of a low RSI reading, a 30 to 33 RSI reading at the same time, maybe we challenge the 100-day moving average. So I'll mark that. It seems several days, if not weeks, possibly away, but let's mark it. Philip Morris. Yeah, I'm in shock by looking at some of these charts, but strong close under the third ATR channel, under the 300 or the 200-day, the 30 RSI, so nothing there. PayPal, is stronger than the rest of the market. I mean, you've seen some of these charts. Here we are moving sideways. A close under the 50, back over the 50. Ideally, a close under the 50, back over the 50, while at the same time triggering a V1. We're close to a 50 RSI. I would be a buyer. I would be a buyer of PayPal if we close under the 50 and back over. See how the 50 also dovetails with the -1 ATR channel. So you have two levels of support there, and the relative strength is high. So I do like PayPal. Not to buy, just out of the blue buy, but as the setup, big picture, this does look good. Remember, identify the setup, identify the zones when things are nice and quiet and you're not trading, and then make a note that I was in a nice, calm state of mind and I determined that a close under the 50 and back over the 50 might be a good entry point for a good risk reward ratio, and then let it come to you. So, all right, Qualcomm. I seem to remember last week when we did Qualcomm, we had all this support back here. Then they had a ruling here, had a big move up, gave it all the way back. If we test the 200-day moving average here, back here where we did have this support, and at the same time it would give us probably a 30 RSI reading, that's a bunch of different confirmations, right? We have a 200-day underneath this, we have a 30 RSI, we have previous support back over here. Yeah, I would be interested in Qualcomm if we got down to this underneath the 200 and back over. So we'll mark Qualcomm. Raytheon, nothing there. Starbucks is somewhat interesting here. We have been moving up. It's been stronger than the rest of the market. Did close under the 50-day moving average and close back above the 50-day moving average. Honestly, if I would have seen this on Thursday, I probably would have bought it. I'd be a little underwater, but I would have bought it here using the 50-day. I closed below the 50-day as my initial stop. You can see Friday it did go below the 50-day, but only intraday. I base all my entries and exits on the close of the day. This isn't bad, actually. I'm going to continue to watch this. If it moves up, then I think the train's already gone, because I like to get the entries as close to my stops as possible. But if we got another close below the 50-day and then a close back above with a higher low from the previous low, that might be interesting. So we'll mark that one. Schlumberger, no. Southern, we moved up. We're back into the value zone, which is positive. But I don't like this big bar, these two big bars here. If this could move sideways for a few more days, stab down, reverse, give us a V1, V2, might be interesting. So I'll mark that one. Simon Property, no. Somewhat interesting on AT&T. We did have the previous low back here. The 200-day did act as a good support level. We're right back at those same levels. We're back where the price found support, and we've also tested the 200-day moving average as well. Somebody could have gone ahead and bought this on Friday based upon that it bounced off the 200 and closed back above, using the 200-day as your initial stop. I did not buy it, but I'll watch it. I do like the different levels of support: the price support, the 200-day support, and if we can test this low back here, we will also have a double bottom with a divergence. See how deep these MACD bars are? See how narrow? This is halfway of the majority of these. So I will buy that also, or I will mark that also. Target Corporation, well, quite strong. Has held the 200-day moving average to the upside. It's too high for me here. Texas Instruments. Take a look at the weekly there. On the weekly we've moved up. We're into the value zone, so that is positive on the weekly. On the daily, a close under the 200 and back over I think would have been better. There's quite a lot of resistance up here. I think I'll just let that one go. United Healthcare Group, moving sidewards. Under the 200, I'll let that one go. Union Pacific did bounce at the 50-day, excuse me, at the 100-day moving average. The RSI readings on 36.89. To me, this is still somewhat in purgatory, so I'll let that one go. UPS, jeez, let that one go. US Bancorp. Nothing there. It'd have to at least get over the 200. United Technologies. What are we at? We're at a 33 RSI. We did hold the 200-day, but you see how we have the 200-day? Do you see how we have the third ATR channel, and we are at a 33 RSI, 33.59 RSI? See, that's what I like to see. I like to see different levels of support. You have some support at the 30 RSI. Looks like you have some support at the 100-day, the 200-day moving average, and at the third ATR channel. I do like that area. What I'd really like to see, ideally what I like to see, is a move down below the 200, down below the 30, down below the 30 RSI, and then a strong move back up on volume. So that is definitely something I will continue to look at in the coming days. Visa, no. Verizon, no. Walgreens, no. Wells Fargo, no. Walmart. Walmart's held up pretty well here. We are back. We are into the value zone here. It has respected the 50-day moving average nicely. So I'll mark Walmart. If we can go down, close below the 50 and back over the 50, that might be interesting. But I like how it has respected the 50-day moving average in the past. So, it's more likely to respect it in the future if you've seen something respect in the past. Not always, right? But I at least would like to know that last time it did respect the 50. And then Exxon. Hoy, no. All right, so let me see the ones we marked. So, these are a lot of them, but a lot of these stocks are already in my watch list. So I'm going to take them off so that, because I'm trying to just make a secondary watch list to look. But I will go through each one of the ones that we've narrowed down and just do a quick recap. So we're at a 29.59 RSI on Apple. If it can close back above the 30 RSI at the same time closing back into the third ATR channel, this is the plus 3 ATR, this is a minus 3 ATR, so this large channel here back into the channel and closing back above the 30, I will be interested in entering a trade if it can do that. I will take it off of this list because it's already in my watch list. Adobe, a close back over the 50-day moving average and a close back over the 50 RSI along with the V2 entry would be an excellent place to enter this and giving a good risk to reward ratio. So in the coming week, I will look at this each day to see if that happens. AIG, we talked about nice, strong move uptrend. We have a completely normal and to be expected move back into value. Ideally, I'd like to see this move sideways for a couple days, then have a stab down and a reversal back, giving us a V1, V2. So that is how I would play AIG if that happens. Amgen, if we can come down, test this previous low, we will have a double bottom with a bullish divergence. MACD is actually positive, which is amazing. That's even better. And at the same time down here, we would have a 30 RSI reading. So it's not there yet. If it does happen in this week, I certainly will be interested in looking at that. So I will mark that one. Amazon, probably one of my favorite ones here. If we can close below the 200-day moving average and then close back above, back into the channel, that will give me a lot of confirmation that this price has been tested and rejected. This isn't my regular watch list, so I will be taking it off of this one, but close under this 200-day and close back over, I think would be a great entry point, giving you a good risk to reward ratio on Amazon. American Express, this has been a pretty strong mover. I would consider, I just have to see what the context of the chart and the price action were, but close back under the 50, close back over, could be possible. So I will keep that one as a possibility. Boeing, same as Amgen, we could come down, test this bottom, have a double bottom with the bullish divergence, go under 30, back over 30, test that third ATR channel. That would give me multiple indications of support and rejections of this price. If we could come back down, move back up. So definitely I will be watching Boeing, although it is in my regular watch list. BlackRock, a close back above the third ATR channel, at the same time closing back above the 30 and closing back above the 200-day may may be a good risk to reward entry for BlackRock. So I will keep that there. Caterpillar, you know, it has held up pretty well in this last couple weeks. We are holding the third ATR channel. We are at a 29.93 RSI, so close back above the 30 RSI could be a good entry point, probably triggering the 200-day as your initial or as your profit target. So that's in my regular watch list, so I will let that one go. ConocoPhillips is a good example of a low, a rally, a lower low with the bullish divergence. Had I watched this on Friday, I would have potentially taken this V1 entry into this. So a close back into the old range would also be a trigger. So I will watch that one. Cisco, if we could test this previous low here and reject it at the same time, rejecting the third ATR channel at the same time, rejecting the 100-day moving average. So essentially coming down, testing, moving back up, testing all these things below us. That range, that ATR channel, the 100-day moving average, having a double bottom with the divergence. So Cisco is out in my regular watch list, so I will undo it here. Dow DuPont, we have this bottom rally, double secondary bottom with a bullish divergence, actually a missing right shoulder, meaning there is no red at all to the downside. It's a 34 RSI. You know, if we could close under into a new range, immediately reverse back up, that would be a good signal. So we'll keep that one and watch that one. Facebook, I'd really like to see Facebook. I'd really like to buy it down here at the 200-day, I'm sorry, the 100-day moving average would be a good possible entry point, a really good deep low dip. If we got down here, we'd be about a 30 RSI. Now, if we had a strong move back up over the 50-day moving average, that would also be interesting for me to the upside. So Facebook's on my regular one. I will be watching that, but Facebook is a good one to watch this week. Google, 33.56 RSI. Triggers on this would be a close under 30, close back over 30. That would be one option. And then a big, nice, strong break above the 200-day would also be a secondary option. I have Google in my regular, so I'll let this one go here. JP Morgan. A strong close, break back above the 200-day, and a rejection of the 100 and the third ATR channel might be a decent entry point as well, and or a close under 30 back over 30. So we'll keep that one. MetLife, looking for a possible V2 on Monday, or a close below the 50 back over the 50 might be interesting also. So I'll keep that one. Merck, I like that it's moved up, moved sideways now. Look for a stab down, reversal back up. That might be a good signal to get us long, but I like that we're in the value zone also. So Merck is in my regular watch list, so I'll undo that one. Microsoft, a close under the 50, back over the 50 would be interesting. Microsoft's at my regular one, so I'll take that one off. Next Era Energy, looking for it to come back down into the value zone, move sidewards, have a V1, V2 reversal of the upside. PepsiCo, moved up sidewards. I'd like to see, again, stab down, reversal back up, V1, V2 entry. Procter & Gamble, you know, down here would be an interesting spot. If it could hold the 100-day moving average, hold the 30 RSI. So I'll keep that one. I do like PayPal's relative strength here. It's moving sidewards, close under the 50, back over would get me interested in PayPal. PayPal is in my regular watch list, so I'm going to take it off this secondary watch list that I'm building. Qualcomm, close under the 200 and back over. That would get me interested in Qualcomm. I'll keep that one. Starbucks, pretty strong here. Did bounce at the 50 and hold. If it could close under the 50 one more time and then back over, giving us a higher low trade from the previous low, I would consider that one. So we'll keep that one. Southern, if it can move sideways a little bit more, stab down, reverse, or close under the 50 back over, I would consider that. AT&T, also would consider AT&T if we can close under the 200-day and back over, giving us a good risk to reward ratio and a defined risk. UTX, I do like the convergence of the 200, the 100, and the third ATR channel. So that will be a potential one to watch. And Walmart, it has respected the 50-day in the past. So if we get a close under the 50 and back over. So in addition to my regular watch list, then the secondary watch list that I'll be looking for next week is Adobe, American International, Amgen, American Express, BlackRock, ConocoPhillips, Dow DuPont, JP Morgan, MetLife, NextEra Energy, PepsiCo, Procter & Gamble, Qualcomm, Starbucks, Southern Company, AT&T, United Technologies, and Walmart. Hey, there I am. So I want to make clear that just because we have identified these particular stocks doesn't mean that I'm going to buy any of them, right? We're just looking for potential setups. We're looking big picture, the context of the chart. And, you know, there's a few tech in there. Now, if I take one tech, it doesn't mean that if the next one and the next one and the next one trigger, I'm going to take those either, because, you know, you don't want to have too high a correlation. You don't want to have 5 tech stocks in your portfolio. If you're, you know, when you're a swing trader like me, that's just too high of correlation. So, you know, even though I have selected 2 or 3 or 4 stocks in the same industry, does not mean I'm going to take them all. I will probably take the first one that I like, and then I just forget about the rest. So I want to make that clear. So this is just a secondary list to supplement my regular watch list that I use Monday through Friday. So, you know, if you haven't tuned in to the live stream that we do Monday through Friday during the last hour of the market, come on by. I think it's fun. I basically do what I'm doing here, but I do it in real time and make trades at the end of the day in real time. And then I will answer any questions that anyone has for 30 minutes after the market closes. So once again, Monday through Friday, last hour of the market on YouTube. And also I should say that I also do offer private one-on-one teaching, coaching, and mentoring lessons with my students in the evening time via Skype. So if you feel like that, you know, some one-on-one teaching with me would help you, please let me know. My email address is in the description of this video, and my hourly rates are in there also. And generally, it starts out with just a call on the phone or over Skype, just to get to know each other a little bit better. And then I'd like to get an idea of how you're trading, what you've been doing, what your challenges are, you know, what your goals are, what you'd like to attain. And then, you know, you and I working together, would come up with a plan and hopefully get you on the right path to being a profitable trader. So anyway, that is it for tonight. I'm going to head to bed. And so hopefully this is helpful to you. If you have any questions about this video or anything else, feel free to email me. There's emails in the description, or you can always send me a message on Skype. Nope, Twitter. On Twitter as well. So anyway, Thanks for tuning in. I appreciate your time, and I hope you have a good rest of your weekend. Thanks, everybody.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.